recording. Whoops. Sending data, streaming, cool beans.
We're all good?
Looks like it.
Hold on. You are live on YouTube right now.
Cool beans. That works. Instagram. Okay, add title on Instagram. There we go.
All right. You're on YouTube, I know that. All right?
That works for me.
All right, I'll talk to you later.
Bye.
Bye.
All right. Scott Cook is in the house. Scott, I'm getting set up still. Give me a little bit. Broadcast failed. Go live. All right. We'll try that one out. This one here. Next. Not made for kids. Go live. That works. Going there. Going there. Good. And we got good here. And there we go. And there we go. Right over there. That works. All right. This is display capture. Okay, that one and that one. That's good to go. Display and oh and there we go and here we go. Alrighty, almost. Uh-oh, who's here? Russ is here. K-Wolf is here. Cool beans. How's it going, Zia? Willie Best, Gaudy. Rich Bruner. Matt, good evening. All right, so we're loading that one. Broadcast failed yet again. Go again. Try it again. All right, James is here. Heller's here. Brent's here. All right. And that's there. That's good to go. What are we looking for here? This one. That's right. And I need to make it smaller. Just a smidge smaller. Good. Katie, good evening. Katie, good evening. Doc is in the house. That almost works. Just move it a slight bit more right there. That works. Got to make that a little bit bigger. And down the bottom. There we go. Right. We are good to go. All righty. So I have a minor issue here, having issues with this one. Don't know one's having issues. Okay. Apple ID, not now. Broadcast. And here we go. Live. Right there. And live. 3, 2, 1. And we're off. So we got TikTok, YouTube, TikTok, Instagram, Facebook. This Facebook over here is not working. Broadcast. Why the heck is broadcast keep failing? I have no idea. All right, so you guys over here, let's give me 1 second. Jimmy, we're going to take a look at Costco in a bit. Just give me a second while I get this rolling. All right, so Sunny Dilo, good evening. Ninder, what's happening? All right, so let's get it rolling, everyone. Here we go, yo. All right. Lisa M, good evening. Wes Con, how are you doing today? Tim McCarty wants to take a look at Target. All right. Sorry. Somebody wanted to look at CSCO first. Cisco. Well, let's take a look at Cisco. Let's trade. CSCO. Here we Cisco. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the motion. Down, up, down, up, down, up. Okay, a lot going on right about here. That's currently now. That's where we are now. So this is today. That was a year ago. So let's see what's happening. First and foremost, oh, all these classes. Oh, wait a second. We got to fix the microphone because apparently we're having issues with the microphone. Oh, Jimmy wanted to look at Costco, not Cisco. Well, Costco is C-O-S-T. Cisco is C-S-C. Tommy, what's happening? Crappy fish. Kevin Awak. Cool beans. All right, so we're here at Cisco, so let's take a look at it. Fadale, good evening. Hawkbird, nice analysis and very good thanks. You're welcome. Mateo, sure. Fadal Deuce, what is the theme? The theme is investing for weekly cash flow using nothing but pre-qualified dividend stocks. All right, hold that thought. Got another TikTok channel over here. Not a heck of a lot happening over there. You guys haven't asked any questions yet, but you're still new here in this channel over here. Who wins Wednesday? Arsenal or Real Madrid? Don't know, don't care. Okay, this has nothing to do with football, so let's keep on moving. All right, so let's finish up with Cisco. It looks like, because Cisco is one of those companies that, hey, I got no problem with Cisco whatsoever. All right, so currently, Cisco, let's change this here for a second. We're looking at the wrong thingy what sits. So we're at 57.44. Go. So the 57.50s are going for 64 cents. That's more than 1%. That's what I'm looking for. Safe, predictable, consistent 1% per week. Well, Cisco's been around for quite a while. I don't see that going anywhere. Okay, hold on. I'm going to hold the questions on TikTok for a little bit as we progress. So let's keep on moving forward. All right, so let's take a look at the chart, get a better understanding of where the motion of the ocean is taking us. I mean, how word? I mean, it goes up, it goes down, it goes up, it goes down. It's kind of like being on a river, all right, or being in the ocean. Up, down, all right, whatever. All right. The high of the year, 66.56, and that was in the middle of February. Well, the bottom of the year, last August, the middle of August, at 44. Okay, so she goes from 44 to 66. Okay, there's the low of the year. Here's the high of the year. That is a 50% increase. So yeah, there's going to be profit taking. Here it is right here. So what's happening recently? Well, let's take a look at it. Brianna, good evening. Hawkbird, Walmart. We'll take a look at Walmart in a little bit. Easy does it. You couldn't have just said one of them a bit rude. Not quite sure what that means. Okay, easy does it. All right, so Cisco, a year ago, was sitting at 49. We bottomed out at 44. That was in August. Okay, we topped out in February 13th, which is the second week of February. From there, slowly down, retrace, big drop here. Now we're going back up. Well, that is the bottom right there. As of this moment, there's the bottom. So does it make sense to jump into like this? We'll be looking at the 14th right there. Here's our last 30 days. Well, the first 3 weeks just went sideways. And then big drop. Now she's going back up. Well, great. At this moment in time, the 57.50 looks like the best and safest trade at this moment. Now, for those you don't know, I like doing covered calls. Why am I having an issue over on Facebook? Okay, that one's not working at all. So Facebook just get rid of those guys. So I'm going to download me some LinkedIn and see if I can broadcast on that. All right, so anyway, let's take a look at Cisco. What does this thing do this time of year? Now for that, we're going to use what's called the seasonality chart. Now the seasonality chart is exactly what it sounds like. It shows you what the stock is moving as compared to the seasons: winter, spring, summer, fall. Well, first quarter, second quarter, third quarter, fourth quarter. This is the whole year. The blue line represents this year's. Okay? So this is the movement this year. Okay? This red line, well, that's 10 years of average movement. Okay, so what does the stock normally do? Well, look at the first quarter, she normally goes down. Fourth quarter, she normally goes up. Well, look what happens in the middle. Well, it is what it is, but we are right here at this moment. See the little blue dot right there? That represents today. Okay, so you got a lot of guys over here on TikTok. Nobody's saying anything on TikTok over on that channel over there. It's always this channel here. Okay, so this is what it's doing now. I want to zoom in to see what this stock normally does at this time of year. Yeah, I'm saying, okay, because you cannot tell me you do not see that. Okay, this is today, this little blue dot. This is what it's been doing normally, going down this time of year. So I'm going to say no, we're going to skip right over Cisco and go on to the next one. All right, let's get out of there. All right, next one on the list, Tim McCarty wants to take a look at Target, TGT. If you guys didn't know, Target is a dividend king. Okay, if you're familiar with what a dividend king is a company that consistently increases its dividends. Well, the dividend is a portion of the profit the company gives back to us, the investors. Yay, baby's in the house. All right. Ooh, Scott, last night we discussed Apache Alcoa. Can you review a trade that was today? Also, review Macy's if a trade was possible this morning. All right, Scott, you're asking some good solid questions, dude. All right, we're having a problem over here on Facebook. All right. That being said, still nothing over here on TikTok. You guys are just watching, not really saying anything. You're always joining, but you're not saying anything. So ask some questions. What do you got over there? All right. Target. Let's take a look at Target. The high a year ago, or the bottom last week. Look at the movement. Down, sideways, big drop, back up, back down. It's accumulating here. It's congesting. I don't know what you want to call it, but it's, getting kind of tight there. So let's see what's happening. Well, number one, the high was 170. Now she's down below 80. Okay, 170 below, right around the 80. That's almost a 50% drop. Well, a 50% drop, well, that's a nice time to jump in if this is actually the bottom of the year. Because you're going to make most of your money buying low and then selling high. Well, if that's the bottom, I want to take a closer look at it. So let's take a look. Brianna, how are you doing? Okay, Hawkbird, we'll take a look at Walmart in a little bit. Easy does it. You could have said, okay, A1 steak. You would be right there, but Donnie's little chart spoiled it. A1, your input. For Target this year, 174. That was a year ago. The bottom just recently, 86.92. Look at the last days. The reason why I want to look at the last 90 days, high, low, where was it? Where is it? Look at the movement. Down, up, down, up. Okay, that's basically what the movement is for the past 90 days, or the past 3 months. Great, let's zoom in, take a look at the last 30 days. So we have a good idea of where do we think it's going next. Okay, sideways, drop, now she's going back up. Well, the bottom was last Tuesday. Now we're heading back up. Okay, fine. What is a good trade to do on Target if we feel this is the bottom, now she's going back up again? Well, there's a lot of different trades you can do. But what makes the most sense? For me, I use a simple trading strategy called a covered call. Now I do other trading strategies, but this is the only one that I teach for free here and give it away. And if you do it right, you can be looking at close to 50% per year. Now, 50% per year, that's a nice number. I like that number. Okay? That allows me to be retired at this point in my life. Fitzair, good evening. Yo, 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 Fitzair's in the house. Okay, Scott, I haven't forgot you. We're going to take a look at that as soon as we're done with Target. Okay, you got quite a bit for me to take a look at. I don't know what the hell's going on with Facebook. We did it last night, and it's just not working today. All right, so let's do Target, because right now Target's at 95. Well, the current 95 right here is selling for 178. Well, that's just a tiny bit short of 2%. Well, 2% is kind of nice if you think about it. All right, so we're not doing Facebook here. Instagram, okay. No, and no. We don't have anything else here? No, apparently we don't. Let's do LinkedIn. Okay, just... No. All right, I'll worry about that in a little bit. Let's do one for the 90, see what it looks like. Do Webull? Okay, A1 Steak, you got to give me the ticker symbol. And I can basically tell you right now, Webull is going to be a no. Because Webull hasn't been around for 20 years. Now, when I say I'm looking at only companies that have 2 decades of profitability, I'm not quite sure. Ooh, Lisa wants to take a look at Dominion, which is D. All right, Lisa, sit tight. A1 Steak, you're not really paying attention. What I decades profitability, that means every single year higher profits. Webull hasn't been around for 20 years. That's going to be a no. He's just going to be wasting our time. All right, so Target, let's see what the numbers look like. So let's get out of here. Let's change up to, let's do the 95 right there. One contract. All right, market. Here we go. Okay. Buy one covered call of Target. Well, that's the order right there. Okay, 17 April 25. That means it's going to expire this Thursday. The $95 call strike. Well, the stock is currently at $4.85 to $95. So if I'm buying it at 95 and selling it at 95, one contract is going to get me $200. Well, how much does that come to? Well, let's bring out my calculator and figure that one out. Calculator there. Okay, calculator, let's clear that. So right here, max profit, $200. Okay, into the calculator you go, $200. And what is it costing me? The cost of the trade, including commissions and fees, $9,300. All right. Divide 9,300. Gives me a grand total of 2.1%. Now, I know 2.1% does not sound that good. Okay. However, 2.1% is going to be over 100% by the end of the year. If you're getting 2% every single week, well, there's 52 weeks in a year. Come on, it's simple math. You learn that in elementary school. 2% a week, 52 weeks in a year, that's over 100%. Well, that works for me. I could go for doubling my money every year. Is that going to happen? Probably not. But it's nice if it could. Now, I do average 1.2% lately. Actually, it's been 1.5% lately. The numbers are just ridiculous lately. Anyway, let's keep on moving. Alrighty, get this out of here, get this out of here, get this out of here, and back to there, and back to here. Alright, so we're back at where we started again. All right, so Jimmy wants to take a look at Costco. Okay, Jimmy, we could look at Costco, but Costco, no, right off the top, and not that it's a bad thing. $979. Okay, now see, if you like it, fine. Wonderful for you. If you can afford $9 a share. Okay, however much money you think I have, I don't have enough to buy 1,000 shares of Costco. Now, 100 shares is going to cost me $97,000. Am I really going to get my money's worth? Well, I don't know. Well, let's find out. Because the current price is $9.80. Well, the $9.80 is going for $10.80. Okay, let's figure that out. Clear. 1080 divide 980. 980. Well, that's 1.1%. Well, don't get me wrong, I love 1% a week. I do. Well, Costco, just by looking at the rough numbers here, 1.1%. Well, that's over 50% per year if you like Costco. But you're going to have to dish out close to $100,000 just to do one contract. That's a little out of my price range, and it makes me a little uncomfortable. I like to keep my stock purchases under $250 or $250, because if I buy 1,000, let's keep on going. All right, let's get out of that. All right, back to where we are. Okay, so Scotty over here wants to take a look at Apache, and he wants to review it if it was a good trade today. Well, let's look at Apache last night. And he has a good point. Very first thing I always want to look at. Always the first thing. Where's the high of the year? Where's the low of the year? What direction is it flowing? I'm looking for 5 things. The high, the low, where was it, where is it, and which direction is it going? Down, up, down, up, down, up. Okay, simplified. Yeah, that's what it looks like. Currently, the price is $15.20. So if I buy it at $15.20, what is the closest strike price I'm looking for? If you don't understand what a covered call is, simply put, I'm buying a stock, then I'm turning around and immediately selling it to someone else for almost the exact same price I paid for it. Now, it doesn't sound logical until you realize that for the privilege of someone buying it from me for the exact same price I just paid for it, they're going to pay me what is called a premium through a trading strategy called a covered call. It's one of the simplest, safest trading strategies there is. It is so safe, as a matter of fact, you can use it in your IRA. It's one of the few trading strategies you can use in your IRA. Because there's a lot of strategies you cannot use in a government-sponsored IRA. So this one is. All right, so let's go back and see the numbers. The high, 34. The low, 14. Well, that is almost a 50% drop. Now, people saying, well, are we in a recession? Well, I think when you see a lot of companies dropping 50% in a year, well, that could be a yes. Okay? But, you can't blame old Donnie Boy, because Donnie Boy took control right here in January. So, yeah, not a lot happened in January. Look what happened at the tail end of JB's. Okay? That's a bigger drop. Donnie takes over, now it drops even more. So it's not all Donnie's fault, so you can't blame Donnie for everything. See, but some people want to, and I don't do politics, so please don't start. Okay, so we're currently at 15.20. The last 30 days, I don't know, what do you think? Look, 30 days ago, we're at 19. Jumps up to 21.50, drops all the way down here to 13.50. Now she's going back up again. Well, it's clear to see. The high is here, the bottom's here, now she's going up. Well, where else is she going to go? All right, so at 15.20, let's take a gander. What does it normally do this time of year? Well, Apache normally here. Looks like it's going to go sideways up until the end of the week, which is the 17th, then drop off. If you're okay with it. Now, this here is not etched in stone. This is just an idea of what it normally does. Now, just because it normally goes down this time of year, the trend, the trend, which is right here, okay, here's the big drop. Once you have a big drop, what's going to happen? So from 21.50 down to 13.50, that's a $7 increase. Now a $7 decrease. So from here to here, $7. That's a 30% drop. See, it was at 21, now it's at 13.50. Okay, that's a 30% drop. So yeah, it's going to go up now. Okay, great. Is that guaranteed? No. It's just logic and common sense. Doesn't mean it's going to. Not guaranteed. Okay, here's the bottom. Now she's going back up again. Okay, great. What was the trade we saw this morning? Well, the trade we saw this morning, this thing opened up at 15.42. So we'd be looking at the 15.50s. All right, well, the 15.50 is going for 31. Now, I don't know about you, but right off the top of my head, 15.50, 31, that's 2%. It is. Okay, 31 cents off of a $15 stock is 2%. Now, 2% every single week. Now, it only takes 5 or 10 minutes. So if you're trading for 5 or 10 minutes every day and you're making 1 to 2% every single week, okay, that's an hour a week. An hour a week to make 1% every counted. Now, one of my accounts is over 100,000. So that means for 1 hour of my time, I'm getting paid $1,000 an hour. Well, that works for me. I'm retired, so 1 or 2 hours a day. Then I do nothing for the rest of the day, or I do whatever I want to do. Okay? So let's keep on moving. That was Apache. Let's throw again what it looks like. 15.50 right there. Just one contract. One contract. Thank you. Here it is. Buy call Apache. 100, that's the weekly. 17, April 25. Well, that's this coming Thursday. Okay, the 15.50 call option against the stock at the market to open. Well, $63 is my profit. That's it, $63. All right, so what does that mean? Well, zoom in and check. Calculator. $63 is the profit. Divided by the cost of the trade, including commissions and fees. 1,487. Well, what does that come? 1,487. That comes to 4.2%. Well, 4.2% per week is over 200% per year for 5 or 10 minutes a day. Well, when I say 5 or 10 minutes, all right, the most time you're going to most time you're going to use is picking your stocks. Because Tuesday, Wednesday, Thursday, we don't do a whole heck of a lot of anything. We just look at the position and say, all right, what did I buy it for? Well, here, I'm buying it for $15.09. All right, and I'm selling it for $15.50. And I'm picking up $63 per contract. So one contract is $63. 2 contracts is $126. 3 contracts is $189. Whatever, you know. So you figure out how many you can afford to do. But look at the rate of return, 4.2%. I'm definitely going to write that one down. Actually, I did write that down for. No, I don't. All right, well, let me write that one down. It would be easier if I knew what my pen was. Damn, there it is, over there. What's it doing over here? Beats me. And that was 4.2. That's a nice one, 4.2. Nice. Okay, so next, he wants to take a look at Alcoa. Now, Alcoa, I did this one this morning, Alcoa. Because the numbers look freaking awesome. And I'm okay with Alcoa. Alcoa's been around for a long time. You know, Alcoa, which is AA. Okay, here's the high, here's the low, here's where it was, here's where it is. Look at this, up, down, up, down. Now it's going back up again. Okay, this is the bottom of the year. It could very well be. Now, old Donny Boy, he pushed back the tariffs 90 days for those that did respond, willing to come to the negotiating table. Okay, well, what's going to happen in 90 days? I'm kind of curious. What's Alcoa going to do in the next 90 days? Well, we don't know, and we probably won't know until the 90 days gets here. All right, well, let's look at the numbers. Okay, we're at 25. So the 25 is going for 113. Now, I know right off the top of my head, okay, on a $25 stock, 113 per share is over 4%. Now, 4% for 1 week is over 200% for the year. Richie Martinez, how's it going? Nevia. Uh-oh. A1 Steak didn't want to repeat what he wanted to say. Okay. Do GameStop. Dude. Okay, A1 Steak, dude, I honestly don't know why it is you have a difficulty time listening. If the company has not been profitable for 2 decades, that's 20 years. 20 years. Okay? If it hasn't been profitable for 20 years, why are you asking me to take a look at it? GameStop doesn't think GameStop even has CME. No, CME is Chipotle. GME would be GME. Historical data. Oh, they go from 9.6 billion to 12 billion. That's always nice. All right, dividends only. Dividends only. All righty then. Okay, so A1 Steak, are you ready for this? Because apparently you have a problem with following directions. Number one, first and foremost, the name of the channel is called Talk. Do you see the first word, dividend? Well, GameStop has no dividends. So why GameStop has no dividends? Webull has not been in business for 20 years. And what did you ask me to take a look at? Sava. What the heck? Yeah, weekly, not monthly. Sava. Never even heard of Sava. S-A-V-A. Yeah. Okay, so apparently, dude, you just don't listen. Okay, apparently, dude, you just don't listen. You say from now on, because just apparently, if some things escape your intellect, let's just leave it at that. Okay. So next, Alcoa. We're looking at Alcoa. Okay, so this is what Alcoa looks like. 25. The 25 looks pretty good. It looks like over 4% for 25s. All right, so let's find out. A year ago, Alcoa is at 39. Well, the high year was in the end of November, and that was 47.70. Well, look at the last 90 days. Okay, the last 90 days, you get your high, your low. Where was it? Where is it? Look at the motion. Up, down, up, down, up, down. Now it's going back up again. This looks like the bottom of the year. Because it's the bottom of the year. At this moment in time, you get 1, 2, 3 days past the low of the year. All right, well, let's take a closer look. 30 days. Okay, same thing. The high, the low, where was it? Where is it? Up, down, up. You can clearly see it on the 30-day chart. And here's the bottom, 3 days to the upside. Great. Well, let's take a look at what that looks like. TM, I like your new look, fresh cut. Got you looking like a 23-year-old Bill Gates. Holy cow! I didn't know I looked that old. All right. We're looking at the 25s. All right. What does Alcoa normally do this time of year? All righty. Well, that looks pretty promising, don't it? For the next 2 weeks. Nice. Okay, that works for me. Let's go back to where we were. Get rid of that, and we'll look at the 25s. What do the 25s look like? 2372, just one contract right there at the market right there, and here we go. By one covered call of Alcoa, what do we have over here? Should we trade in this market? Oh, LMND. Okay, now I'm not quite sure if you want to trade in this market, but investing and trading are two different things. See, I'm investing in stocks. Granted, it looks like I'm trading, but not really, because everything is perception. I'm buying a good quality stock, okay, that is in an upward trend. I like the company. It's been around long enough. It has increased its profitability for more than 2 decades. So yes, yes, yes. Now, I'm buying it at the current price, which is $24.79. Okay, the bid, sorry, $24.87. So the current price is $24.87. Well, that's what I'm buying it for. So I'm looking for cash flow along with a good company. Well, they increase their dividends every 90 days. Well, I mean, every year, but they pay the dividend every 90 days. Okay, so yeah, that's what I'm looking forward to. And if I buy it at $24.87, I'll collect the dividend every 90 days. But I'm going to let somebody buy it from me for a little bit more than I paid for it. And they are going to pay me for one contract $130. Now, I know $130 doesn't sound like a lot of money, but I'm investing my money anyway. My money is just sitting there doing nothing. So why not add 5 or 10 minutes a day to increase my rate of return fivefold, whatever you're getting now. This here can get you up to 50% per year if you do it right. It's really not that difficult, and it was created for my 9-year-old daughter when she was 9. Okay, it was simple, it was easy, it was safe, it was predictable. Okay, there's a couple of simple rules. Rule number 1 is never buy something you don't understand or you don't want to own. If you don't want to own it, don't buy it. It's actually that easy. If it doesn't make sense, don't buy it. If the numbers work, don't buy it. It's actually that simple. So Alcoa, yeah, I like the company. It's been around long enough. They've consistently increased their profitability. So yeah, everything falls in line. Great. So if I'm buying it at 24, right here at the ask price, $24.86. Is that right? No, sorry, $24.87. And I'm selling somebody the right. And they don't have to buy it if they don't want to. But if they wanted to buy it from me at 25, anytime between when they pay me the premium, which is $129 per contract, and the date of expiration. In this example, the date of expiration is the 17th of April, which is 3 days away. Oh, monthly. I like the new look. Got you. Alex, how does Nike look? We'll look at Nike in a little bit. Antoine, James, last week my Mara price increased fast. It was called away on Wednesday. I thought Friday is when that happens. I made money though. Okay, so Antoine. Now, I say this over and over and over again, and don't take this personally because a lot of people assume the same thing. Here in the United States, a stock option can be exercised anytime the person who bought it wants to. It is their right to buy it from you at a certain price by a certain date. So this one here, the one we're looking at this moment in time, if I sell it tomorrow morning, whoever buys it has between tomorrow morning and Thursday at 4 o'clock to buy it from me. They don't have to if they don't want to. And they don't have to wait until Friday. They can do it anytime they want. But you made money. Good for you. Way to go. I'm missing some of these questions. All right, Sosco, Costco, Cisco. We did that one. All right. JCN Robert, how are you today? You understand? Cool beans. Samuel, what would be a blueprint for a covered call? Oh. Okay, Samuel Romero. You're new here. Sit, chill. We'll see if I can explain it to you. All right, so Alcoa. There it is right there. The maximum profit for this trade at this moment in time that we're looking at, just in case there's more downside, should we sell a put, then if assigned, sell a covered call. Okay, so Lemonade, I'm sure that's your name. You're talking about the wheel strategy where you sell a covered put first and then once you own the stock, sell a covered call. Yeah, that'll work. It's just too many cooks in the kitchen, so to speak. So I like one strategy at a time, perfect one first, and then add another one to it. I mean, what you're saying does make sense, and yeah, it does work. Okay? But try not to get too complicated first. Learn the simple things first. All right, so let's find out what the rate of return for Alcoa is. 50, and what is it costing us? Okay, the cost of the trade, including commissions and fees, $2,371. All right, 2371. Divide 2371. 5.4%. So what has to happen here? Well, in order for this to happen, let's go through a few things first. Well, number one, okay, the number one question you need to be asking yourself is, does it make sense? That's the number one. If you don't understand it, slow down, take your time, and ask questions. That's the only way you're going to get the answers. Just ask a lot of questions. Okay? So as you ask questions, you will get the answers slowly. So number one, does it make sense? Okay? Number two, do I like Alcoa? Well, I like Alcoa. That doesn't mean you like it. But that's the question you need to ask yourself. Do you like Alcoa? Does it make sense to you? Is Alcoa, okay, Alcoa, is that a company you're okay with to invest your money and hold on to for the rest of your days? Well, I say that meaning like don't buy it unless you plan on holding it. But if by chance somebody wants to buy it from you for more than what you paid for it, why not? Profit is profit no matter which way you look at it. And nobody ever went broke taking profits. So if it makes sense, you can make a profit, great, fine, do it. Okay? But we know what the numbers look like. That's a nice trade, Alcoa. I already have it written down. And I actually did buy some this morning. Not that I'm telling you to buy it. Remember, make sure you hear me right. I'm not telling you to buy anything. Okay, so here's the thing. Stocks go three different directions. Up, down, or flat, sideways, whatever you want to call it. All right. So a year ago, we're at 36. She shoots up, she comes down. She shoots up, she comes down. She shoots up, she comes down. It's no matter what you think, whether you like it or not, is totally irrelevant. Okay? But I can guarantee you one thing, or two things. Tomorrow, the stock is going to go up. And then the stock is going to go down. And then the stock is going to go up. And then the stock is going to go down. What you're trying to do is you're trying to pick the right time. Or you're trying to just buy it, hold on to it 10, 15, 20 years. Well, hey, if that's what you're looking for, you're in the wrong place. I don't buy and hold anything. I'm looking for weekly cash flow because my bills come due every month. And if I didn't do this, I would be working, 40, 50 hours a week. Well, I really don't want to. I've been working since 1973. Before some of you were even born, I think it's time for me to relax and just share my knowledge. All right, that's what I'm doing. So if a stock does nothing but go up or down, keep your eye on it. If you like the company, you should have a list of stocks that you like. If it fits, great. Add it to your roster. Is it the right time? Well, as she's coming down, no. But as she's hitting the bottom, turning around and going back up, well, yes. Okay, zoom in a little bit closer. Okay, stocks go down until they're done. Once they are done going down, they turn around and go back up again. That's basically what they do. When they go up, it will get to a certain point where people will say, wait a second, this thing is this high, I'm going to take my profits before they disappear. Because that's what they do. Stocks go up, people take profits, and the stocks come down. It gets down to here, and people say, wait a second, Alcoa at 22? Hell yeah, I'm buying some. But here's the thing, look at this. The bottom right here, below 22. Now it's above 25. Well, it doesn't mean much, but that's a $3 increase. Now, you're probably thinking, yeah, it's only $3. No. $3 on a $22 stock, that is 15% increase. Think about it. You get a 15% increase in 3 days, and you don't take it, don't be surprised if it gets taken away from you. Stocks go up, stocks go down. When you buy it, you get two choices. Buy it, hold on to it forever, and ignore everything I say. Well, that's your opportunity. A lot of people do it, and there's nothing wrong with it at all. Not what I want to do. I want to, the high, it drops. I call that profit taking, because it ain't a profit until you take it. And once you take your profit, the stock slowly drops. And when it gets down to here, the bottom, look at the distance between 36 and 22. That's a $14 drop. From 34 to 22, $14. Now, $14 on a $34 stock, that's over 30%. 30% drop. Now it jumped up 15%. Do the percentages. Do the numbers, because numbers are a wonderful thing. Numbers are the only international language, because 1 plus 1, no matter what language, no matter what galaxy you're from, 1 plus 1 is going to equal 2. This is not George Orwellian crap where 2 plus 2 equals 5. No. We're not into that crap. 30% drop, 15% increase. Yeah, I want 1-2% every single week. That comes to over 50% return for me. 10 or 15 minutes, 50%. I can do that all day long. Well, not really. I only do it for 15, 20 minutes a day. But you know what I mean. All right. So let's go on to the next one. That's Alcoa. Macy's. Scotty wanted to take a look at Macy's also. Hold on a second. All right, Scott, we'll take a look at one more for you. Macy's. Now, I do have some Alcoa. I do have some Macy's. And that other one, what was the first one we looked at? Apache. Oh, I have some Apache also. Okay, so Macy's is going to be the last one we look at for Scotty. Here we go. Now, Macy's. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at this. Sideways down. Sideways down. Now she's going up. 1132. All right, what's going on here? Let's take a closer look. So it's at 1132 at the moment. So I'll be looking at the closest strike price being the 1150. The 1150 is going for 18 to 22. That's over 1%. Well, that works. If you want 1%, pick a good company. Macy's, they've been around for over 100 years. I don't think they're going anywhere anytime soon. Now, yes, I understand a lot of the stores have closed. Now, like I said, I don't do politics, but we know why they're closing. Because the previous administration did not want to prosecute thefts under $900. They said, we don't want to deal with it. So that like open season, walk into a store, grab some shit, and just leave. And they wouldn't do anything. So yeah, it happens a lot in the last 4 years. Well, this year, things are kind of stopping, and maybe it'll turn around. Don't know. But Macy's had 4 buyout opportunities last year. 4. And Macy's corporate said, no, we will buy back all the shares at 24 before we sell. Well, now we're down to 11. That's a 50% drop from where we were buying it. Now, we've been buying this thing for a year and a half, following it up, down, down, up, down, up, down. You think that I buy here and I'm losing my head. No, no, no. I'm doing 5 days at a time. I jump in, take my profit, get out. I jump back in, take my profit, get out. I jump back in. So I made over 50% on just Macy's last year. But Macy's was at 24 when we started. Now it's down to 11. So if it's dropped 50% in price, how did I make over 50%? Covered calls, weekly covered calls. So yeah, I have a weekly covered call on Macy's. Let's take a look at it and see if it makes sense to you. The high of the year, the end of May last year, 2067. The bottom right here, which was 4 days ago on the 8th. All right, well, let's take a look at all the numbers. A year ago, we're sitting at 1906. Jumps up to the high, over 20. Last 90 days. Okay? Sideways, down, now back up again. Okay, you don't have to do all of this. I mean, basically, down, up, down. Okay, look at the last 30 days. Sideways, down, now she's going up. And she's got a gap right here. Now, gaps have a tendency to fill. What does that mean? Well, that means there's a hole here on the downside. So that hole has been on. Let's keep on moving forward. Oh boy, oh boy, oh boy. I missed a couple questions over here. Price, we're looking at Alcoa. Oh, holy cow. A1 Steak actually come up with a decent stock, CVS. All right, we'll see if we can get around to that one. Ooh, Lemonade wants to take a look at Kohl's. Let me write that down. Kohl's and CVS. All right, see what we can do. All right, Lemonade, hold tight. We'll get to that one. Which stock is this? Darien. It is Macy's. All righty. Mama, good evening. I fly to you. Interesting. Darian. Lisa. Oh, D. I haven't done D yet. All right, so let me quickly take a look at Macy's. What do the numbers look like on Macy's? We're looking at the 1150. All right, yeah, the 11. Wait a minute. No, 1032. Yeah, I'm sorry, 1132. We're looking at the 1150. 1150. There it is. At the market. There we go. And it's off. There it is. Okay, so look at this. 39.50 is the profit. 1100 is what it's going to cost. So let's do a quick check on that. You guys have seen this before, so I'm not going to go into complete detail. 39.50 divide 1100. That gives you a grand total of 3.5%. Now I like 3.5%. That works for me. TN, Robert Boyle, how's it going? Jose, que pasa, amigo? All right. So 3.5% from Macy's. I like that one. Yep. And I still have it written down at 3.5%. Okay, let's get this one up here. Now, Lisa wanted to take a look at Dominion, which is D. All right, D. Dominion. Dominion. Ooh, interesting. Now, it should take you 3 to 4 seconds to review a chart. Okay? I'm not talking taking a microscope and seeing all the little all the little tiny movements. I'm just taking a look at the overall look. Okay, it takes you 3 seconds. High, low, was, is, what's the movement? That's it. That's it. Okay, the high, the low, where was it, where is it, what's the movement? Up, down, sideways, down, up. Okay, overall simplified. I don't want to get into, huge amounts of data here. It's not that important. At this moment in time, the price is $54.61. So I'll be looking at the 54.50s, which it doesn't have. It's got a 55, and that's only 20 cents. The 52.50. Yeah, sorry, honey. These numbers just don't work. Okay, don't get me wrong. Dominion's a great company, but the numbers don't work. Oh, and it's a monthly. Oh, Mike, why didn't I see that? Sorry, Lisa, that's a monthly. No. Nope. Nope. The question is, how do we know which stock is good to do a dividend and a covered call? Oh, B. Ergen. I'm so sorry. I didn't notice it either. I didn't realize it was a monthly for some reason. It's okay, Lisa. So, B. Hergen. Okay. You want to know which stocks are good to do for covered calls. All ready? Hope you got a pen and paper. You ready? Here they come. You ready? Dividend Kings. 54 companies that have increased their dividends for 5 decades. That's 50 years. Dividend Aristocrats. 67 companies that have increased their dividends for 25 years. That's a quarter of a century. Dividend Champions. 150 companies that have increased their profitability for 25 years, quarter of a century. Dividend Contenders, 300 companies that have increased their profitability for 10 years to 24 years. Not quite making that quarter of a century, but they're working on it. Okay, list number 5. We can throw in Warren Buffett's list. Let's buy what Warren Buffett's buying. If it's good enough for Warren, it's good enough for me. So let's keep on progressing. Alrighty then. Wait, I need to get a pen and paper. Alright, so what do we have over here? Fitzgerald. Yo, yo, yo. Gail, good evening, is Gail. Scott. So you believe Apache is worth the investment until the end of the week to make 4% no matter if the stock declines or rises. Alright, Scott Cook. You weren't listening to what I was saying. Okay, Scott, I got 5 simple rules. Rule number 1, this is one you're not grasping. If you do not understand the stock, if you look at all the numbers and all the research and it doesn't say buy me, hold me, love me, all that kind of crap to you, don't buy it. Don't go by what I'm doing. I'm just showing you numbers. I'm just pointing out the charts. Don't ever listen to somebody on YouTube or TikTok or something like that. Do your own research. Do your own due diligence. I'm just pointing the direction. Okay? You find out the information for yourself. Get familiar with it. Do the numbers. Do the research on Apache. If you like it, don't worry about me. I'm perfectly fine. If you like Apache, you decide. I'm not telling anyone to buy anything. I'm just looking at the numbers. Because when I put Apache in here, that's what the chart is. What the numbers are what the numbers are. It's got nothing to do with me. I'm just reading it. Okay? Now, I did buy Apache this morning, and I did buy Alcoa this morning. Because to me, they look fine. But I have the belief that I will hold on to Apache until the day I die, or somebody buys it from me at what I paid for it, or more. And I will sell a covered call every 7 days until that happens. It could take a year, it could take 5 years. I don't care. I'm getting a weekly cash flow from every single stock I have. I don't own anything that does not give me a weekly cash flow. So we're creating a cash machine, a cash asset. Okay, so we're buying assets that are giving us that can give weekly cash. Now, one of the main reasons I don't do monthlies, because a monthly, see, 17 April, 16 May, 20 June, 18 July, those are monthlies. You can only trade those once a month, which means that's a no for me. If I can't trade it every single week and get a weekly cash flow from it, I don't want it. It's actually that simple. So no, I did not say go buy Apache. I said I bought Apache today. That doesn't mean you should go do it. Okay, if you want to research it and see if it makes sense to you, totally different story. I don't give advice. I don't give tips. I just point out things. Money 101. Good evening, Scott. And the mindset is if it goes down, you sell the same strike price over and over again, making premiums till it finally hits a strike. You almost got it. Okay, so if I buy it at 54 and it drops down to 30, I'm not going to be selling the 54s. I'll be selling the 35s, the 36s, and 37s. Something far enough out where I'm not at risk of losing, but close enough where I'm bringing in some cash flow. Okay, cash flow is king. All right, correct. Understand. Just want to clarify the mindset. Cool beans. You got it. Way to go. All right. Where are we now? Darian. Brian Garcia, good evening. Chris Alba. James, what should I do if I only have 800 US to invest? Chris Alba, how are you today? My suggestion with your $800, do some investing in your own education. Okay? Because what they cannot ever take away from you is what's up here. Okay? Whatever you learn can never be taken away from you. All right? Now, if you're serious, my suggestion is go find a trading platform that will allow you to practice for free. Okay, I actually have 7 accounts. One of them is a paper trading account. Okay, I have live accounts and I have one paper trading account because even after 20 years of trading, I still paper trade and I still practice. Because there are other strategies and other opportunities that come to light once in a while, and I don't want to risk real money, so I still paper trade. Okay, I get seven accounts, and it's very challenging once in a while because I don't want to put real money at risk. So I practice. All right, Lisa wants to take a look at BBY. Is that Best Buy? BBY? It is Best Buy. All right, well, let's take a look at Best Buy. Now, I'm not 100% sure if Best Buy has 20 years of increased dividends. I don't know. Let's take a look. Now, I always tell everyone, if you're going to be serious about trading, you should have access to a finance website. I use Yahoo Finance. Okay, you can use Google Finance. You can use NASDAQ. You can do NYSE. Yeah. All right, so let's take a look at, what are we looking at now? That's weird. Somebody asked me to take a look at something. Yeah, well, we'll look at Best Buy. There we go. Best Buy. BBY. Here we go. Go. All right. Best Buy. All right. I want to see all dividends. All right. All the way back to 1985. Nice. Now, as I'm skimming through, I want to look at these numbers. 1980 numbers. So this is March 2025, December 2024, September 2024. Again, these numbers should slowly decrease. 95, 94, 92, 88, 70, 55, 50, 45, 34, 20. What's that? That's a big one. What happened there? Okay. 20 years will be 2005. Here we go. 7, 8, 10, 13, 14, 15, 16, 17, 19, 23, 28, 34, 45, 50, 55, 70, 88, 92, 94, 95. Well, that's consistently increasing. That works, right? If it's consistently increasing year after year after year, that works for me. All right, so that's Best Buy. Let's get out of there. That's a lot easier. Think about it. That is a lot easier than trying to look at 20 years. Okay, Lemonade, hold on. I'm going to do Micron and Kohl's in a second. But that was easier than reading 20 years worth of annual reports or quarterly reports. Because if a dividend is a portion of the profits, okay, bypassing all that crap, if the profits increase, well, that works for me. All right. Best Buy. All right, let's go. High, low, was, is. Look at this. Down, up, down, up, down, up. All right. Interesting. It's currently at 61.76. So the 62 is going for 126. That's 2% for 3 days. Okay, because Tuesday, Wednesday, Thursday, because options are going to expire on Thursday because there's no business on Friday. So 2% for 3 days? Yeah, I'll do that. A year ago, we're at 77. The high is 104. Last 90 days, look at that. High and low was, look, it's two gaps. Gap down again. Highs here, bottoms here. Look at the motion. Up, down, sideways, down, now back up again. It's easy to read. How about SCHD? Samuel, do me a favor. Go check out the numbers. Seriously. Go check out the numbers for SCHD. How many years have they increased their dividends? Find that answer, and then I will take a deep dive into that for you. SCHD. Go check it out. As of Friday, I narrowed down the Dividend Kings, Aristocrats, etc. list and found these to be good setups. Review if you have time. Altria, Nextera, Coca-Cola, Nucor, Raytheon, and Pepsi. Okay, well, you didn't take a really good look at Coca-Cola and Pepsi. Very rarely do they pay 1% or more. But you're right, Scott. Those are good companies. Those are on my list. Awesome. Good for you, Scott. I like those. All of them. Okay, last 30 days. High, low was this. Look at this. Sideways, down, back up again. That works. It makes sense. Best Buy. Well, let's find out what does it normally do this time of year. Well, normally, there we are right here. It looks very choppy, doesn't it? Okay? But a little bit to the downside. Sideways, a little bit to the downside. Not huge, but okay. But here's the thing. When you're looking at the seasonality chart, it gives you an idea of what it normally does. Normally. Well, we're not in normal times at this moment. So is this thing going up or is this thing going down? That's not really the question you should ask yourself. Well, we know that the profits are steadily increasing. Well, that part's good. Seasonality only gives you an idea of what did it normally do over the last 10 years. Well, that does not surpass the current movement. Okay, current movement. Sideways with a slight upward tilt. Big drop. Now she's going back up again. You can argue all you want. It's right there. Okay? That's what it is. So, do you like Best Buy? I do. The numbers look great. 62. The 62's right there. Okay, there's a 62, just one contract. That's all I need, just to show you what the numbers look like. Now, normally when I buy them, I buy 20,000 at a time. Not 20,000 shares, $20,000 at a time. That way I like to keep my trades all even. So if I got 5 trades, 20, 20, 20, that's 100 grand. Okay, here we go. Buy one covered call, Best Buy at the market. Here's the price right there. 174. It's costing me 6 grand. Well, let's bring up my calculator and see what that exactly means. 174 divided by 6,026. 6,026. 2.8%. For 3 days. That's almost 1% per day. Now, I don't know why that's not exciting for some of you guys. But think of it. When was the last time you got 30%, 40%, 50% per year? Well, most people, they want to buy something, just leave it alone and get rich overnight. Well, unfortunately, it doesn't work that way. Okay? I put in 10 or 15 minutes a day, and I get 50% per year. All right. I had to put some time in, put some effort in it, and yeah, I'm making a nice higher than normal return. All right, let's keep on going. Tony, how are you doing? So Chef Jerky doesn't see it. I'm not quite sure what is it he's not seeing, but okay. Samuel Romeo, SCH dividend growth is 67%. Oh, okay. So Samuel, I hate to do it to you, dude, but you know, if that's the way you want to look at it, let's do this. So Samuel thinks that SCHD is paying that money. SCHD. Samuel. SCHD dividend 16%. Okay, so I have a minor issue. Okay, Samuel. All right, Ricky, hold on. What about Zim? Ticker for how do you feel about Whirlpool? Okay, Zim and Whirlpool, two different things. Okay, right now I gotta explain something to Mr. Samuel. All right, Samuel, check this out. Number one, SCE in my category. Wouldn't even bother looking at it. Now, I want to look and see how often they have increased. Okay, that means, are they consistently profitable? Well, let's take a look. 2012, 7, 7, 8, 8, 9, 9, 10, 9. That's backwards. That's not profitable, losing money. When you go backwards in profits, yeah, it's not a good sign. That was in 2015. 10, 13, 11, 9. That's 3 times this thing went backwards. Okay? 3 times it went back. Now, when I say consistently profitable, 1, 3, 5, 9, 11, 15, 18, 21, 27, consistently higher and higher and higher. This ain't doing it. Okay? 8, 9, 9, 10, 9, 10, 13, 11, 9. That's going backwards, dude. No. 12, 16, 18, 21, 23, 20, backwards again, backwards again. So in 12 years, it went backwards 7 times. How can you possibly tell me that's consistently profitable? Okay, you're saying their profits, the dividend growth is 16%. Okay, come on. I'm not quite sure we get information, but I use Yahoo Finance. Yahoo Finance, right here. The yield for SCHD, this is the stock, SCHD, the current price, $25.30. The yield is 3.72. 3. So every $1,000 you put in, you get $3 back. Wait a minute. $30 back. So every $100 you put in, you get $3 back. That's 3.7%. Okay? Year-to-date daily total return, negative 6.57. Now, I don't know where you're getting your information from, Sam, but this is Yahoo Finance. Okay? For the fun of it, let's go to Google Finance and see what they say. Google Finance, right there. Now, I don't finance. I don't. You know, he's saying, what Samuel is saying is that SCHD has a growth of 16.7%. Well, I'm reading it and it's not saying that at all. So I'm kind of curious. Are we looking at the same thing? Where the hell are we even looking? New. All right, right there. SCHD. Okay. Where the frick is the information? Okay, previous blah 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 blah. Okay, what the hell? What are we looking at here? I've never used Google Finance, so I'm totally lost. Where is the dividend yield on SCHD. Okay, SCHD dividend yield. It's not showing up. Follow, share, details. Where the heck is the detailed information? I can get the stock price anywhere. I'm not looking for the stock price. I'm looking for the... All right, hell, I'm wasting my time. Right, needless to say, I don't do SCHD for a multitude of reasons. Number one, the yield is terrible, in my humble opinion. Okay, so for what you're reading, what I'm reading, two totally different things. Okay, I don't know where you got your information from. I know where I got mine from, Yahoo Finance. I've never been to Google Finance, so I really couldn't tell you. Okay? But I looked at the numbers, and the dividends don't increase every single year. They don't even have 20 years of dividends. Well, they have 13 years? 13 is not 20. Okay, so no, I wouldn't look at SCHD. Also, I think SCHD is a monthly. Okay? 17 April, 16 May, 18 July, 17 October. Means I can trade it once a month. Hell no. Sorry, dude. No, I just don't like SCHD, and I don't know where you got your information from. What was stock analysis where I got it? I appreciate your time. No, well, that's what I'm here for. I'm here to enlighten people. Okay, I don't know where you got that information from, but when it says growth, they're not talking for growth from the beginning. Was it year over year? Well, maybe they did more this year than they did last year. That might be right. But overall, no. It just no. Okay? All right, so what were we going to do next? Oh, MU, Micron. Ooh, I like Micron. What do we have here? Okay, over here, just TikTok over here is like nobody's saying anything. All right? I got two TikTok channels. This one over here, tons and tons of questions. This one over here, no questions at all. Chris, SCHG just did a payout of 11.226 shares for my 1,200 shares. My bottom line is it's better than a bank. Oh, alrighty then. Mr. Premium of the option. How about Mera? Ooh, Macy's and Altria. Okay, cool beans. All right, that being said, let's keep on moving forward. Scott, I'm not looking at all of those. Okay, that's just a little bit too much. Okay, I like Altria. I like Nextera. I like Coca-Cola. I like Nucor. I like RTX, Raytheon, and Pepsi. I like them all. Okay? Okay, that's good. Alrighty. Tony, John Williams, how you doing? What is your view on Sentinel-1? Okay, Chef Jerky, you got to give me the ticker symbol. Okay, Sentinel-1, never heard of it. Dr. Stacy. Good evening, Dr. Stacy. How are you today? Okay, unlimited. Target can still go lower. Yeah, anything can still go lower. But what are the odds and probabilities? Okay, so odds and probabilities. Target's over 100 years old. They've increased their dividends for 5 decades. Could it go lower? Yeah, it can. Is it going to? Don't know. Gold. Okay. Ali Ahmad Amini. Yep, good for you. Apple, 500 line, night, big downwind. Okay, fine. Mr. Premium of options. How about selling calls, puts, and rolling when needed? Well, Mr. Premium, that's exactly what I do. Okay, you're new here, so you don't know what I do, but that's what you're saying is exactly what I'm doing. I sell calls, I sell puts, and I roll when needed. It's exactly what I'm doing. So, thank you for that. Yeah, unlimited can go down. Zorro, what stock is this? This is MU, which is Micron. So let's take a look at Micron. Here's the high. Here's the low. Here's where it was a year ago. Here's where it is now. Look at this. Up, down, sideways. Okay. 71.02. The current bid is 70.55. So we'll still be looking at the 71, which is going for 250. Now that's over 3% if you like Micron. And that's always the biggest question. Do you like it? Does it make sense for you to put your money into this company? No, I can't tell you what to do, and nor would I ever even think about telling anyone what to do. It's a choice only you can make. Either you like the company or you don't. Either it makes sense or it don't. I have 5 simple rules. Rule number 1, never buy something you don't understand. Rule number 2, never sell at a loss. It defeats the purpose of the game. Rule number 3, consistency of profitability. I like 2 decades. 2 decades makes sense to me. Rule number 4, weekly options only. Rule number 5, make sure the numbers work. What are the numbers? Well, what am I buying it for? What's the closest strike price? What is it selling for? Is that more than 1%? And then, is the chart telling me it's the right time to buy? Because it's not always the right time to buy. I don't buy at the high of the year, no. And I don't buy at the bottom of the year. Okay? I buy somewhere in between. Stocks go up, and then they come down. And when they come down, guess what? They hit a bottom, and they turn around and go back up again. That's what they do. So, find some good companies that you like. Invest in them when you can, when you see the opportunity. Make your profit, move on to the next one. Because it will go up and then it will come back down again. When it comes down, well, when it goes up, take your profit. When it comes down, jump back in. And it goes back up again. Okay, let's just move on. A year ago, Micron was at 123.46. The high of the year was a double high at 157.29. Okay, look at the trading range between 88 and 110. Almost 8 or 9 months. Just sideways. That's what they call sideways, or channeling. Right about there. There to there. Look at that. Okay? Sell, buy. Sell, buy. Sell, buy. Sell, buy. Sell, buy. Sell, buy. Up, down, up, down. That's all it does. Last 30 days. Okay. Here's the high. Here's the low. Now it's going up. See? Now it's going up. You can't deny it. You can bitch, moan, complain all you want. There's the high. There's the low. Now she's going up. It is what it is. Herbie, how you doing? Florida girl. Florida girl, how you doing over there? All right. That's a no. What the hell were you thinking? How far out do you write? And what is the delta? All right, Mr. Premium of Options. I like your question. I do. However, AAL. So, A1 Steak wants to take a look at American Airlines. Can you review American Airlines? American Airlines. Simple. High, low, where was it? Where is it? Look at this. Up, down, up, down. Now she's going back up again. $9.58. The 950s are going for 33. The 10s are going for 13. Either one of them looks decent. What does it normally do? Patrick Mann, buy Tesla stocks. Hey, Patrick, how about no? Now, the reason I say no to Tesla stocks, Patrick, not political in any way, shape, or form, Tesla doesn't have dividends, which means they don't share their profits. So, no. If the company has no dividends, no. So, Patrick Mann, okay, the name of the show, or the name of the live, whatever you want to call this scenario, I like to call it a show because I'm here and I'm showing you, okay, Dividend Stock Talk is the name. dividend stock talk. Tesla doesn't have dividends, so Tesla is a no. That's it. Plain simple. No dividends, no thank you. All right, where are we? Okay, so let's look at the last. A year ago, 13, drops to 9, shoots back up to 19. Look at that. From 13 to 9, that's a $4 drop, almost a 50% drop. Then from 9 to 19, that's a 100% increase. 100% increase. Yeah, profit taking. There it is right there. Now it's here, back down below 9. Now it's at 958. You got that, Patrick? I don't mean to insult you in any way. Okay, I don't. Okay, the name of the show is Dividend Stock Talk. Dividend investing for weekly cash flow. No dividends, it can't have, it just doesn't work. Sorry. All right, so let's keep on going. Last days. Okay, check it out. 30 days ago, we're at 1060, jumps up to 12, drops all the way down to 8. So from 12 to 8 is a $4 drop. Now from a $12 stock to 8, that's a 33% drop. Okay, but from 8 up to 11, that's a $3 increase, which is 3 off of 8. I don't know, what, 8, 9%? Great. Okay. Mio. You should, I drink beer and whiskey, folks. Okay. Weeklies or monthlies? Okay. Mr. Premium of option. Mr. Premium of the option. Weeklies only. I don't do monthlies. The numbers just don't work for me. Not in my favor. Okay. If I can't get a consistent 1% per week every single week, no. You can't get that with a monthly optionable stock because guessing where it's going to be in 30 days is not as easy as guessing where it's going to be in 5 days. 5 days is a lot easier. All right, so that's American Airlines. All right, next. Wow, we got a lot of questions to do here. Now, at 11:15, we stop all the stocks and we just look at questions. Still, there's no questions over there. Adnilla, what's happening? Talking about selling CSPs and LEAPs. Okay, I know what a LEAP is, but what's a CSP? If you don't mind. Because I've done a lot of work in my life, from farmer, fisherman, to construction, to manufacturing. Everybody has an acronym. Okay, or an abbreviation. What's a CSP? Cash secured puts. Gotta love them. I love the cash secured puts. I do, but I don't teach them here. I teach one strategy for free and only one. Now I do have a morning trading group. I'm not trying to sell anyone anything, but it is a paid service. People paid to trade with me. Okay, great. Now we do cash secured puts there. We don't discuss them here. Because there's so much information out there, I don't want to scare people away with all the information out there. And yeah, people like you and I who know a lot, yeah, I don't want to be, I don't want to have a small group of smart people. Okay? That came out wrong. Sorry. But what I'm trying to teach is something simple, safe, predictable, consistent. Okay? So if I stick to simple, safe, predictable, consistent, the same strategy I taught my 9-year-old daughter. So how do you teach a 9-year-old how to trade the stock market without losing? Okay, it had to be simple. It had to be safe. It had to be predictable. It had to be consistent and no way for her to lose. So yeah, the strategy I came up with was covered calls against dividend stocks at a certain time. All right, let's keep on going. Better Kingdom Angels. Luke, how are you today? Brian Garcia, how are you today? Zorro, thanks, you're welcome. Heidi, can we look at BMY, Bristol Myers Squibb, and Dell? Brian Garcia, re-explain that. Okay, Brian, I'm terribly sorry. The numbers in blue and gray, please. Oh, okay. Down here, these numbers in blue. Well, Oh, over here? I'm not quite sure which ones he means. But over here, this is the stocks, the movement. Down here, this blue, that's the volume. Okay? Over here, we have the numbers. Over this side are the call options. Over this side is the put options. Anything in the black area is out of the money. Anything in the purple area is in the money. Okay? And then right where they meet, the purple and the black right there, that's called at the money. ATM, at the money. ITM, in the money. OTM, out of the money. Okay, there's a lot of, what do they call those thingies? Abbreviations. Every industry had their abbreviations, and some of them are similar to other abbreviations. Calls. Okay, but when teaching a 9-year-old, I had to keep it simple. I had to keep it less than 10 minutes. That's where he came up with the 10-minute trader strategy. It was created for a 9-year-old. Okay, number one, these are the only stocks you're looking at. Only ones. Okay? And the this is going to be something good. You're going to like this. You're going to like this. Week 3, week 4, blah, 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 blah. All these little green dots represents companies that are getting ready to pay a dividend. Well, those are the ones I like. However, these are all of them. No, I don't look at all of them. I only want to look at certain ones. Right here, right there. Okay, all these in green are the companies that have increased their dividend payments to their shareholders for 25 years. That's a quarter of a century. That means each one of these companies here have increased their profits, because you cannot increase a dividend payment unless you have more money, which is the profits. Part of the profits are passed on to the investors on these little green dot dates. Okay? These are called EX dividend dates. This is an EX dividend calendar. You can go to Google, find one, download it for free, use it, or Thinkorswim actually has one. All right, so let's take a look. O Realty, Cardinal Health, Illinois Tool Works, Nucor, Ben Franklin, McKesson, Hormel, Caterpillar, Procter & Gamble, AbbVie, Abbott Labs, Clorox, Lowe's, so on and so forth. Every stock that I look at, every one that I like, I put it into a calendar, and the calendar tells me when is the dividend going to be paid. Well, think about it. If you know when the dividend is going to be paid, and the dividend causes the stock to increase in value, that little tidbit of information can be very valuable. But what do you do with that information? Lemonade! What is the fee for trading group for secured puts? Well, Lemonade, it is a trading group where we take a look at all the different trading strategies. I prefer the two simplest ones, which is a cash secured put and a covered call. Okay, sometimes we throw in calendar spreads, sometimes we put in other spreads, sometimes we look at a lot of different trading strategies. But I like to keep it simple, safe, predictable, and consistent. Okay? Marina, how are you this evening? All right, so let's keep on continuing. Where were we? Oh! So, by knowing when the company is going to have its dividend, the stock has a tendency to increase in value. What's the fee? It's $100 a month, 5 days a week. Monday, Tuesday, Wednesday, Thursday, 9 a.m. until you guys are done asking questions. I will literally stay on until you guys are done asking questions. Okay? Friday, we jump in at 2:30 because we want enough time to make sure nobody loses any money for the week. So we'll take a look at each and every individual trade that everyone has just to make sure nobody loses. So it's well worth the money. You're getting $100 to get every single one of your questions answered. All right, let's keep on going. All right, so by knowing when the stock is going to move, that's a great valuable piece of information. So by knowing that, you can decide what trading strategy you want to use. Okay, so here you go. Other than just buying stocks and selling stocks. Single option, vertical, back ratio, calendar, diagonal, straddle, strangle, covered, synthetic, butterfly, condor, iron condor, vertical roll, collar with stock, double diagonal, unbalanced, and deep and wide. These are all the different strategies there are, just on the options. Okay, and then you got the calls, and then you got the puts. You can buy a call, you can sell a call. You can buy a put, you can sell a put. All of these strategies, yeah, there's way too much. Way too much. What I tell people, if you're serious, learn one strategy first. So the strategy I'm giving away for free, a covered call, 1% a week. That's over 50% a year. If 50% a year doesn't excite you, doesn't make you say, hey, this looks interesting. When is the last time any of you got 50% a year for 5-10 minutes worth of work? Okay, usually never, because it's not something that people normally get. All right, let's keep on keeping on. All right, Heidi wants to take a look at Bristol Myers Squibb. Buyers of calls are gamblers. The sellers of calls are the casino. Well, Mr. Premium of the option, I love that thought, that analogy. That's a great analogy. Now, I don't buy options anymore. I used to years ago, but not anymore because 80% of all options expire. So why the hell would I want to buy? I want to be the seller. All right, Heidi wants to take a look at Bristol Myers Squibb, BMY. BMY. Okay, 3 seconds. High, low, was, is, down, up, down. Okay. Doesn't thrill me, but let's take a look deeper. 51.30. So there is no 51.50. So the 51s are going for 88, but I'm losing 37 cents. Yeah, so the 57, that's not going to work. The 52 is going for 52. Well, maybe 1%. If I like Bristol Myers Squibb. All right. Well, let's take a closer look. A year ago, 48.67. We bottomed out in July at 38.90. Last 90 days, high, low, was, is, up, down, up, down, up. Okay, only 2 days to the upside. Not quite what I'm looking for. Zoom in a little closer. Last 30, right there. Okay. Sideways, down, up. Okay, only 2 days. Not enough to make me excited. I like to have 2 days the upside, and then on the third day, maybe I'll jump in. Maybe. But look at the drop from 61.50 to 49. That's a $12 drop. A $12 drop on a $60 stock is 20%. It's a 20% drop. Okay, so from 49 to 51, that's only $2. That's not even 5%. So it's got a long way to go back up again. If you like Bristol Myers Squibb. Now, what does it normally do this time of year? Normally, okay, here's where we are, the little blue dot, okay? The blue line represents the movement this year. The red line is 10 years worth of movement. That's 2015. 2016, 17, 18, 19, so on and so forth for 10 years. This is the average movement. And usually this time of year, it has a tendency to go up for a couple more weeks before she comes back down again. So yeah, we could get into a trade for 1 or 2 weeks, jump on out, and then jump into something else. Well, I like Bristol Myers Squibb. Take a little ride, get 1 or 2%, jump out, and then jump into something else. Well, let's take a look at Dell. She wants to take a look at Dell also. Let's get out of there. Now, I like Dell. I don't own it at the moment, but let's take a look at Dell. Here's the high. Here's the low. Here's where it was. Here's where it is. Look at the movement. Up, down, up, down. Now she's going back up again. Well, going back up again is kind of like what I'm looking for. I want to buy at the bottom and take it for a ride to the upside. Well, let's zoom in. A year ago, 120. Jumped up to 180. That's a 50% increase. 120 to 180 is a $60 move. Okay? 120, 50% of 120 is 60. So 120 and 60, 180. That's a 50% move right there. So from 180 down to 90, this is weird. From here to here is 50%. From here to here is 50%. Now we're at 90 and it jumps up to 150. That's 60%. 60%. Then from 150 down to 70, that's 50%. Okay, 50%, 50%, 60%, 50%. That's weird. Anyway, but those are the numbers. All right, so what's it doing lately? What have you done for me lately? Down, up. Okay, 101 is the high, drops down to 66. Now from 66 to 90, that is 50% there. Not something I want to jump into. Sorry. Now, I like the movement. The high, down, now she's back up again. But look at the number. From the bottom here to the high here. That's over 30 bucks. Well, $30 on a $65 stock is very close to 50%. Do you think, seriously, think about the numbers. If you bought here and she jumped up 40 or 50%, would you be holding on to it? I know I wouldn't. I'd be bailing. Now, it looks like it has more space to go. It does, but it already had a 50% there. Gaps have a tendency to fill. So don't be surprised if for the rest of the week she starts to pull back a little bit. We only need a little bit of a pullback because you need enough room for people to take their profits, grab their footing, and jump in again, because that's what we do. Investors, we like to make a profit. Stock goes up, great. Nobody ever went broke taking profits. If you buy a stock and she moves up and you don't take your profits, don't be surprised if they disappear, because that's what they do. Let's keep on going. Benjamin, encourage more viewers to share. Cool. Chaz Urich, thank you. All right. Rough. Target lost 10% this month year to date. Thank God I didn't listen to you. I'm glad you didn't listen to me either. I never told you to buy Target. Okay, let's take a look at Target. TGT. I want to, for the fun of it, okay, so here's Target for the year. Okay, the high, 169, the low, 87. That's a 50% drop, but that's for the whole year. Okay, but look at all the movements. Down, up, 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 down, up. Consistently. Down, up, all the time. Up, down, up, down. That's what it does. So when you say, you're glad you didn't listen to me, I'm not quite sure what you're talking about. Okay, so to monitor, trade, here, back over to here. All right, so now, however you want to look at this, Ralph, okay, Target is a dividend king. They've been around for over 100 years. They have increased their profits for more than 5 decades. Okay? When I say never buy a stock you do not want to hold on to long term, I have no idea what you thought you heard when you say, glad you didn't listen to me. Okay? I'm not quite sure where you decided to jump in and saying, I told you to buy. I don't tell anyone to buy anything. I'm strictly a numbers person. There's the high, here's the low. Look at the motion. We can see that the last 90 days looks something like this. Okay, here's the last 90 days. Down, up, down, up. Okay, great. Now, I could have jumped in anywhere in there had it looked right and made a profit, and I don't know what you're talking about. But here's the thing. The last 30 days right here. Here's the last 30 days. 30 days ago, we're at 105. Jumps up to 109. Drops down to 87. Now we're back at 97. 94.65. Okay, so here's your high. Here's your low. Now is the time to jump in my humble opinion, if I was going to do it. And it's at 95.64, 94.65. The 95's 178. That looks good. What does it normally do this time of year? Okay, so here we are right now on the 14th. Well, this is today. Looks like she's gonna go up a couple more weeks before coming back down again, because that's what she normally does. Now, I don't tell anyone what to buy, what not to buy, but you can't miss this. Okay? Here's where we are right now, just before this peak, and then she's gonna drop before she slowly increases on the third quarter. Okay? Now, it's not guaranteed, but this right here looks a little bit more favorable. 30-day high, 30-day low, now she's going back up again. Fine. But there's a couple of very important questions you need to ask yourself. Question number one, do I like this company? Does it make sense to me? Okay? If I don't know it, if I don't understand it, if I don't feel good about it, I'm not going to buy it. It's that simple. If you don't like it, don't buy it. That simple. Number two, never sell at a loss. Number three, make sure the company's consistently profitable. Dividend king, more than 5 decades of increased profitability. Number four, weekly options only. It works. Number five, make sure the numbers work. Well, the numbers all do work for Target. So let's take a quick look. 95 right there, covered stock, the 95 right there, one contract at 95, okay, at the market, there we go, and here it is, buy one covered call of Target, 100, 17 April 25, that's this coming Friday, 3 days away. The $95 call option against Target at the market to open. Well, look what the price is. $94.72. Well, you can't get any closer to 95 than $94.72. Well, you could. $94.99 is closer, but you know what we're talking about. $94.72. The closest strike price is going to be the 95. $220 is the profit. It's going to cost $9,000. Let's see where that comes out to. Clear that. 220 divided by 92.80 gives a grand total of 2.3% for 3 days. Well, what you should be asking yourself is, number one, does it make sense? Number two, is this a company I want to buy? And do I like this company at 95? Am I willing to hold on to it until it hits my target? These are a lot of very important questions you need to ask yourself. All right, let's keep on going. Back to where we started again. All right, let's go. Oh, 11:15. Alrighty. Weeklies, blah, blah, blah. Yep, got that. Alright. You wave to, okay, great. Still having a problem with Facebook. Alright, music spot. Fresh haircut, looking 10 years younger. Wow, thank you for that. Lindarella, good evening. Uh-oh. Chef Renzo wants to know if JEPQ is good. Uh-oh. Samuel Romero wants to like Ford. Okay, let's take a look at Ford. I'm trying to avoid JEPQ. JEPQ is not one of the stocks that fit this strategy. But we'll take a look at it, only because I say I will look at everything you guys want me to take a look at it, whether I agree with it or not. Ford, 971. The high, low, where was it? Where is it? Look at this. Sideways, up, down, sideways, down, up, up. Okay. 971. The 950s are going for 34. The 985s are going for 14. The 10s are going for 910. Okay. 985, 14. That looks pretty good. I like Ford. I don't have any Ford. I sold my Ford last week. Well, because the numbers look good. And it hit my target. Why not? All right. A year ago, 1251. The high of the year, 1485. A couple of weeks later, there's the bottom. Big drop. Went sideways the last 90 days. Okay? High, low, is, up, down, up. Okay, what was that? 1, 2, 3, 4 days to the upside? Nice. Can it keep going? I don't know. But think about it this way. Ford has been around for over 100 years. It's one of the few stocks. Where the book value is higher than the current purchase price. Okay, I don't know if you know anything about book value, but if you're going to liquidate the company, sell off all its assets, pay off all its debts, the book value would be what's left. How much is that per share? What does your portfolio consist of? Okay, you're not even giving me your name, so why should I tell you what my portfolio has if you're not even at least telling me who you are? Last 30 days. High, low, is. Look at the motion. Up, down, up. We still got plenty of room to go to hit that high. But 850 to 970. It's only $1.50. But $1.50 is almost 20% of $8. That's almost a 20% gain. So could it go higher? Yeah, it could. Is it going to? Different story. Don't know. Well, let's keep on moving on. The 970s, which were 985s. Let's give it a try. Wait a second. What does it normally do this time of year? What do cars normally do? I'm going to say no. Okay, for Ford. Okay? I don't know about you, but that don't look good at all. Yeah, so no for Ford. I'll wait until mid-May, hit this price where it goes back up again. Okay, it's not that it's guaranteed. It's not. But it at least gives me an idea of what does it normally do. That sucks because now I got to look at JEPQ, and I hate that. It's one of the few that I hate. I do. JEPQ. No. Okay? Chef Renzo, you ready? 17 April, 16 May, 15 August, 21 November, 16 January. These are monthly options. Okay, monthly options means I can only trade monthly. And here's the thing about monthlies. This one, nobody ever seems to answer this for me when I pose this question. All right, comes up to 49. Great. I mean, don't get me wrong. The chart looks great. That's 30 days. Monthly option, every 30 days. Great. Now, this is where it was, and this is where it is. Now, tell me where it's going to be in 30 days from today. That's the problem with monthly options. You got to figure out, well, it went up, down, up, down, up, down, up, down, up over the last 30 days. Well, great. Where's it going to be in the next 30 days? Monthly options, you got to figure out where is it going next. It's hard enough to find out 5 days, but look, from the way it looks, it appears to be going up. So in 5 days, maybe 52, maybe 53. 30 days, no clue. Easier to find 5 days, which is a weekly. Okay, every week, every 5 days. Monday through Friday. That's easy. Okay? April 17th to May 16th, that's 30 days. How the hell am I supposed to know what it's going to do? It's going to go up and then it's going to go down. Then it'll probably go up again and then maybe come down again. But where's it going to be as compared to 49.93? I have no clue. That one of the other reasons I don't do monthlies. JEPQ is a monthly. No, thank you. Just no. All right, so we're down to questions only. We got 10 minutes left to go. So let's see what we got. Oh, wow. Okay. Just me and my charts. Can we look at M? We already looked at M earlier today. Macy's. Mina. Oh, it will go lower. Yeah, probably. Half the country is boycotting Target. Okay, Mina, I'm not quite sure. Because with half the country boycotting Target, the other half of the country is not. And they're still turning a profit. Terry, James, good to see you. Always good to see you. Ooh, VLO, Valero. Give me 1 second. When is the best day to purchase with this strategy? Bloom on. There is no such thing as a best day. Uh-oh. Uh-oh. Here we go. Prove that I'm alive. All right, let's do this right there. All right. American Airlines or Ford? I would take Ford. They've been in business longer and they're not as... I'm trying to think. What's the right word? Volatile. There you go. Anyway, where are we? Oh, VLO, Valero. I don't have many questions left, so Valero, VLO, VLO. Interesting. Let's take a gander. VLO, 180. Down, up, down to 100. So it goes from 180 to 100. That would be 45% drop, maybe? 45? Okay, well, here's the bottom here. Now she's going back up again. Do you like Valero Energy? Well, last 90. Okay. High, low, is, up, down, now up again. Here's the bottom here. Got a gap there, a gap there. They have a tendency to fill. This one was filled. We got this one to go next. Okay, can it get back up to this area? Well, it can, but is it going to? Oh, let's take a look. Last 30. Sideways, down, up. It's easy to see. What does it normally do this time of year? Well, this time of year, yeah, I'm going to have to say no to this one, dude. Okay, this is where we are right now. Now, is this guaranteed? No, this is not guaranteed at all. This is just what it has done over the last 10 years on this time period. Well, we are looking at the third week of April, which is week 16 for the year. There's 52 weeks in the year. We're in week 16. This is week 16. Okay, or week number 3 for the second quarter. Okay, so apparently she goes down in week 16. So I'm going to say no to Valero for me. If you like it, total different story. More power to you. I wish you the best. All that kind of nice, neat, fun stuff. Thur Bloomgren. Okay, just me and my charts. What platform do you use? Okay, just me and my charts. I use Think or Swim. It is offered through Charles Schwab. Samuel, what would be the time to close my covered call? Okay, so Samuel, with the covered call, you have a bunch of different opportunities. The main idea of a covered call is to buy a stock, sell it to someone else for a certain price so they can buy it from you. Well, that's one way of getting rid of it. Number 2, the option expires, and then you write another one, and you just keep rolling it forward, 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 forward. That's another one. Or 2, well, that's it. Either somebody buys it from you, or the option expires. It's either one or the other. But never buy something unless you plan on holding it long term. Pro Shopper, good evening. Really bored 88. BBY. We already looked at that one. Well, BBBY. I never even heard of BBBY. What the heck is BBBY? I need the right one. BBY I've heard of, but 3 B's? Oh, Bed Bath and Beyond. No, there is no BBBBBY. Krampus. Thurr Blumengren, what's your top 5 dividend stocks? That would be Macy's, Kohl's, Nordstrom's, U.S. Steel, and Walgreens. David, good evening. Ohio, Ramiko. Okay, Visa. Okay, we'll have to look at that one tomorrow. I got 3 minutes before 11:30. Zach, are you bullish or bearish for the rest of the year? Okay, dude, I'm always bullish. Always. Okay, as the stocks go up, I make money. As stocks go down, I make money. As stocks go sideways, I still make money. Okay, I have a strategy that works in any market. They out of business, Bed Bath & Beyond, so why are we looking at it? Okay, Khaki. I was given CEG. It gives me quarterly dividends. There's one that gives you weeklies. Okay, Khaki, you weren't listening. Okay, there aren't any stocks that I know of that pay weekly. However, there are dividend stocks that have weekly options, and it's the weekly options that gives me weekly cash flow. Krampus, help for beginners? Absolutely. That's why we're here. One traveler for life, jargon. Okay. Dr. Stacy? Acronym. Okay, got it. Noel Starlight. As a beginner, where should I start? We should always start at the beginning. Sir, what's your prediction for the next Australia against the US dollar? No, I don't do, wait. Forex. Yeah, no. Samuel, any thoughts on Pepsi? I love Pepsi. Samuel, catch me tomorrow because we're at 11:29. I am done at 11:30. I do answer each and every individual question. Over here at TikTok, all those questions have been answered. Here at YouTube, all those questions have been answered. Now we're on this TikTok to get those questions answered. Tasha, good evening, and how are you today? Calendar, manually created or subscription? Okay, so dividend calendar is included in this software. Now, I'm not selling the software, okay? I'm not even giving away. It's not mine to give away. This is Think or Swim. It is a trading platform where you buy and sell your stocks. Hasuna, good evening. Adam Williams, good evening. Tasha, he may not understand this strategy. Okay. Hey, 86 is in the house. How's it going, dude? Mom of 2, back again. Don't fall for it. No target wars right now. We're talking money. Thank you, Mom of 2. Samuel Romeo, thank you. You're welcome. Laura, good evening. Thank you. Also, I'm getting ready to quit for the day. Only death and taxes are guaranteed. No. Hasuna, you ready? There's 3. Death, taxes, and disappointment. Okay? 3 things are guaranteed in life. Death, taxes, and disappointment. Richie Martinez. Good evening there, Richie Martinez. How are you today? Tasha, thank you for that. Mom of 2, thank you. Mars, where do you look for this stuff? I'm not quite sure specifically what stuff it is you're talking about. Okay, I use Think or Swim, which has everything I'm looking for, except for some details on some of the book values and some other things. Thank you for your time. Disappointed. Samuel, terribly sorry you're disappointed, but it's guaranteed you're going to be disappointed at least once a day. I like just watching the Think or Swim videos on 2x speed. Yep, I do it too. Sometimes 2x speed, sometimes 3x speed, because they talk so damn slow. Yeah, 2x speed or 3x speed. That's the way I listen to it. I do books on tape. I listen at 2x speed because most people just go too fast. I mean, too slow. So I like going faster. It enables me to concentrate more on what's going on. Sprite, hello from William McKinney from Kansas. Hey, Sprite, how's it going? Mark, how many companies do you need to make money? You only need one to make money. It's how much money do you want to make? Thanks, David. Live, got it. It's not the way it works. Okay, Penn, I have no idea what you're talking about. It's not the way it works. Love to hear what you got to say about that one. What's my win rate using this system? Lapman62. Not very many people ask me that question. Difference between VOO, hell no, and VFV, hell no. How about no and no? I don't like either one of them. They don't fit. Okay, so if you take a look at the stock market, we looked yesterday, 10,034 different companies. 10,034. VOO, no, hasn't been around long enough. VFV, never heard of it, so more likely it's a no. So Lapman62, what is my win rate? Well, let me think. Hold that thought. I want to show you something just for the fun of it, because nobody really asks me that question. Okay, we're actually going to my website. We're actually going to my website. Ready for this? I think you are. Here we go. 2025. I bet it's damn good. Damn it, you took away my what do you call it? Taking away my... Okay, so here we are, Lapman, week 15 of the year. Week 2, which is April 7th to April 11th. Week 14, week 13, week 12, week 11, week 10, week 9, week 7, blah, 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 blah. So what you're seeing on here is 3 accounts. Now, I have 7 accounts, but you're seeing 3. Okay, on these 3 accounts, I have 2 losses this year. 2 out of all of these trades. Every single trade made this year. Whoops, here we go. So what do we have here? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 12, 13. 14, 15, 16, 17, 18, 19, 20. Week 1 alone was 20 trades, 0 losses. Week 2, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 12, 13, 14, 15, 16, 17. So week 17, week 2, 17. You can count them yourself, but you count each and every one of these trades this year. I have 2 losses so far this year. That's it. Now, one of them is flat out loss. Flat out, no way to revive it. But the other one, well, it's almost at a break even. Because what I did is I took a small loss, I went in, I bought it back again, and I'm trying to build it back up again. All right, so hypothetically, there's 2 losses at this moment in time. By the end of the year, I'd like to get that down to 1. But I'm going to try to remake my money on that one. What's my win rate using this system? So far, it's close to 98%. So I have over 100 trades this year with 2 losses. That's 98%. But all the numbers are up there on the website. AMAEX, mom of two. Amex. I have no idea what that is, mom of two, but it's nice to see you. John Sandoval, what about senior care stocks like Extendicare? Okay. Now, John, I got no problem with that whatsoever. However, okay, I don't idea, extended care stocks for elders. I think it's a wonderful idea. But when it comes to money, are they profitable? Are they consistently profitable? Is it a good place to put my money as an investment? Latman, 50% return, very good year. So, Latman, you weren't really paying attention, were you? Okay. Latman, you ready? Account number 1, 40% for the first quarter. Account number 2, 29% for the first quarter. Account number 3, 47% just for the first quarter. We are in week number 3 of the second quarter. So most of this is from the first quarter. So yeah, I'm definitely looking at over 100% by the end of the year. 40% in the first quarter, 30%, 47%. Oh, hell yeah. Nice you still see, wait a minute, nice to see you all the time. Mom of two, I'm here all night. Every night I'm here. Latman, cool beans, yep. Nice, yep. All right, thank you. Okay, so John, you understand that? No, don't get me wrong. I love the idea. Kenny Oracle, we can take a look at it tomorrow. I'm done for the night. I'm just, doing the pleasantries, saying goodbye to everyone. That's all I'm doing. That being said, I love the idea, really do. I just got off a racist live with black folk. Yeah, well, don't bring any of that here. Seriously. Okay, I don't do any of that stuff. I talk dividend stocks. I don't do any of that weird stuff. So don't even. I'm just, I don't want to know. All right. No, I'm not. It hurt my feelings. Okay. I'm sorry your feelings got hurt. Okay, but I'm just getting ready to finish up. I was just saying bye to everyone. I usually end at 11:30 and it's 11:39. I'm a little bit late. So that being said, you guys all have a great night and I will see you all here again tomorrow night if you feel to come back. What time do I usually start? Usually around 9. Now sometimes it's 9:01, 9:05, 9:15. Like tonight was 9:15 because we had a family meeting tonight. We're talking about some really cool stuff. Anyway, we'll touch more on that later. Hasuna, good evening. Mimi, 2U14. Okay, Laurie, you're welcome. Thanks. Okay, you guys have a great night. Over here on Facebook, you guys have a great night. Don't know why I'm even using this. It's not working for crap. Instagram, you guys were a little quieter than usual, but alrighty. Have a nice night out in Instagram world. Shaq Cree, I don't know why my question's not answered. Well, this is the very first question I've seen. Dude, I answer each and every individual question. I do, honestly. I answer. If it pops up on my screen, I will answer it. Okay? So more than likely, you may have put something in your question that got monitored and kicked off. Because you can't just ask anything. Okay, I do have parameters that if you ask the wrong question, it won't go through. So I don't know, because I do answer each and every question. Oh, you're from Scotland. What's your channel about? You asked 2 questions, so we'll ask them right now before I quit for the night. Right now, ask them, and I'll see if I can get an answer. Okay, so Art the Crease Sniffer. You do realize that's a very disturbing name. Jay Moore. Dude, evening. I haven't seen you in a while. All right, Shaq. COP, ConocoPhillips. I love it. We looked at it yesterday. Okay, COP came up as 2.9% yesterday. That was a nice trade if you did it. Yeah, so Art might be a better idea to come up with a new name. That's a disturbing name. Calibri, haven't heard from you in a while, dude. Did you cover Intel? I did a 2050 call today. Ooh, I love Intel. I do. But Calibri, do me a favor. You're already into the trade. Great. Wonderful. I'm into Intel also. Check with me tomorrow. We'll do another one. Shaq, you got one more opportunity. Let's go. Yeah, so Art, come up with another name, dude. That name's got to go. All right. So, you guys over here on TikTok, you guys have a great night. Have a lovely day. And we are out of here. And now, here we go. All right. So, for you guys here, depends if you have a disgusting mind, do you? It doesn't matter if I have a disgusting mind, I don't. But just the sound of it cracks the crease sniffer. It just doesn't sound good. And no, I don't have a disgusting mind. But anyway, you have a great night, Art, and you guys over here on YouTube, have a great night, and we'll see you again tomorrow. What is a crease? Well, a crease could be anything. It could be the crease of my armpit, the crease of my elbow, the crease between my fingers, could be the crease of my butt cheeks. It could be a crease anyway. It just sounds horrible. Brian Sackwriter. Wait. Okay, what do you got? Okay, Shaq, I'm waiting for you, dude. Yeah, it's disturbing, Art. Stock if you own. Okay, so Shaq, you asked me two questions. COP, ConocoPhillips. I said, yeah, wonderful, great. Now it's stock if you own. What does that mean? I don't know what that means. Okay, Brian, what's the subject? Investing in dividend stocks for weekly cash flow. I'm looking for a simple, safe, predictable, consistent 1% per week. That's over 50% per year. Okay, basically 50% per year for 5 or 10 minutes of your time on a daily basis. Okay, so Shaq Cree, stock if you own. I'm not quite sure what that means. Okay, I'm going to take off for the night. You guys have a great night, and we will catch you again tomorrow. Whoops. Okay.